I'm going to replacement cost and actual cash value. I don't know if a lot of people understand it, understand the concept of it, or are faced with you have an ACV policy, an actual cash value policy, not a replacement cost policy, or you have a replacement cost policy, but they're withholding some of the money and they're going to pay you when you fix it. So what happens is you have to understand what replacement cost is. Replacement cost. It's what it costs to replace today. Seems like logical and simple. Actual cash value is a little tricky, but it is a simple formula if you're using the right formula to determine it. So the cost to repair or replace at today's price. If you bought a wood nightstand at a yard sale for $40, or your neighbor was throwing it out and you walked out there and you said, I'm going to put this in my basement. So it cost you nothing. But when you walked over and you got it in 1972, it sold for 200 bucks. So you can buy a nightstand today for 300 bucks. You can also go find one in the trash. In this scenario, you have to say, what am I buying? That old dresser that you have is solid wood. They don't make solid wood furniture anymore. If they do, it's really expensive. If you go to Lane or you go to Bassett, you go to these companies, it's a beautiful solid wood door, but you turn it around, it's particle board on the sides. So you're going to pay $800 for the name, but it's not what you had. What you had may have been old, but it was quality, or it was made of something that you're entitled to, not what is on sale, not what they sell at IKEA or Target or anything like that. You're entitled to the calculation starting at the replacement cost. So you're entitled to same, like, kind, and quality. The RCV, replacement cost value of a solid wood, high quality nightstand today could be between $650 and $1,200. Find a real furniture store that sells real furniture and buy a piece of quality furniture to replace what you have. If the calculation of actual cash value is replacement cost less depreciation, replacement cost less depreciation equals actual cash value. So what is depreciation? The IRS depreciates it by age. If anybody here has a business and you bought a piece of equipment, you're depreciating the daylights out of it as quickly as humanly possible because you're taking tax benefits from it. Insurance companies depreciate by age. Every year we're taking 10%. So in 10 years, your dresser's worthless. It really doesn't work that way. Depreciation is a deduction for a combination of age, condition, and obsolescence. So you can have a 20-year-old carpet. It could be in perfect condition because it was in the living room and nobody goes in the living room. Or you can have a 2-year-old carpet in your basement and your kids destroyed it. The replacement cost is what it costs to replace today, and then you apply a depreciation to that item. You apply depreciation to your roof. You apply it to everything, your contents. So the dresser's old. It's not obsolete. It's a dresser. You actually used it as a dresser right up until the day it got destroyed. And it's in excellent condition. So I would say it's a 10% depreciation. If your replacement cost is $1,200, less $120, your actual cash value is $1,080. Your insurance company, whether you have an actual cash value policy or a replacement cost policy, they owe you the actual cash value up front. They have to give you that number up front. The numbers that we argue with are, we do an inventory. It's a $1,200 dresser. They had $200. It's a $1,200 dresser, 20 years old, but in excellent condition. We're taking 10% depreciation, ACV. They, in a lot of cases, the insurance companies will want to take a higher depreciation. What you're going to notice when you look at your depreciations is they're lower. In Sandy and in CATs and catastrophes, where they're bringing in adjusters that work on it, a lot of adjusters will say to you, the more I give you, the more I get. that's the case. So they're lowering your RCV, your replacement cost value, and they're taking a small depreciation in some cases because they want to get paid more money. When it comes to contents and stuff like that, they're taking larger depreciations because they have to show the insurance company that they're doing a good job for them. So, same principle basically works both ways. If any of you remember those big camcorders you spent $1,200 for at one point in time, that same camcorder, the replacement cost today is a $100 handy cam. So if you have an item that was really expensive that is obsolete, then you apply the appropriate calculations. So if that old Sony Handycam for $1,200 still worked and was in good shape, it was X years old, it would take a depreciation. I would depreciate it, let's say 50%, because it still works. So you're entitled to $600. If the insurance company says the replacement cost of it is $100, less depreciation, you're getting less. So you have to understand what the item is. You have to know you live by the sword, you die by the sword. It's very simple. Some items do depreciate, some items are obsolete, but those items are few and far between. Unconditional payment you will hear in articles, you'll hear lawyers talk about it, you'll hear people say you're entitled to the unconditional payment. The unconditional payment is the actual cash value. Very plain and simple. RCV, less depreciation, is actual cash value. It is the undisputed actual cash value. If you have an argument, you disagree with your insurance company, and you're going to file a proof of loss, or if they came up with a number, you think you have $200,000, or they came up with 70 grand, they have to pay you that 70,000. It's not conditional upon a release. You don't have to do anything for it. You should submit a proof of loss, and it should be the unconditional or the undisputed actual cash value. You, the insurance company, came up with this number. You owe me that money now. And I'm still going to argue because your number's wrong. So you're entitled to the actual cash value when they determine it. Replacement cost less depreciation equals actual cash value. If you have an ACV or an actual cash value policy, what is important to you is that the replacement cost number is the right number and the depreciation is appropriate, because you should, in most cases, have enough money to rebuild. If you have plaster on your walls, don't get a drywall number and depreciate it. Get a plaster number to replace plaster, apply a depreciation, and the actual cash value of that plaster will give you more money than you're going to spend on drywall, and you can use that money somewhere else to offset somewhere where you're not covered. Very important piece, who is determining your loss? Somebody, if it's one of the guys in the pilot mentorship program, it's his first claim. He's deciding what your loss is. He's not a builder. He's not a builder in the city of Long Beach. He's not licensed, insured for anything in construction and doesn't even know, but his computer tells him what's behind that wall, and somebody's telling him what to write. Go in, measure, take your pictures, here's what you have to do, here's the database you have to use, and that's what you're writing. So, does he know New York pricing? Does he know the estimating? Is his estimating program adjust for higher costs? It really does if he makes the adjustment. He's not allowed to. He's told he can't. So he's not. It does, they're not. What database are they using? Xactimate uses a national database. It started with a 1,600 or 1,800 square foot tract housing. They're building 200 homes. That's the price starting point. They adjust for zip code. They adjust for trends. They adjust for other things. What they don't tell you is Xactimate, Xactware makes Xactimate, they built this program to auto-adjust. So if you go get a boiler and it says $3,000 in Xactimate and it costs you $12,000, the adjuster is supposed to change the price to $12,000 and upload it. And now what happens is the next price list comes out and it adjusted for higher prices. But the insurance company adjusters are told, do not adjust pricing, because they're uploading every one of their million, 2 million, however many estimates. And what they're telling the program that auto-adjusts to track those trends is that there's no change here. It's the same pricing as it was before the storm and a year ago or whatever. So cost of living goes up, minimum wage goes up, materials go up, everything goes up, and they're uploading the same exact prices across the board. When they say to you, I need the plumber's invoice, what they're doing is they're taking the boiler line item out of Xactimate. They're putting bid item, which has nothing. They're going and entering a line item that says, boiler quote from insured, work was done, see photos, $12,000. That estimate is going to get uploaded. When it does, it's got a filter. Everything that matches gets changed. If that scope doesn't match something, it just gets dropped and is gone. So the way they're uploading estimates is just managing the next people that are going to have a claim. That's what they did the last storm in another state. That's what they do everywhere. It's just part of the program. It's how they make money.